going through some technical indicators and some price action levels that are important to look out for every time when you go into a trade. Please indicate if you can hear me clearly. And if there are any questions that you'd like to ask maybe before we start, please do. Kyle, thank you. Harmony, hi, Irfan, you can hear me. Elder Dutoy, perfect. Okay, Ross Smith, I just joined in. I can hear. Okay. Oh, oh, oh. Okay, guys. I want us to start by looking at spotting the support and resistance levels on a chart, understanding when to go in and when not to go in. And every time when a trade idea gets sent out, I want you to be able to do your own analysis to validate whatever that we've just sent you. If you are not happy with the trade idea, you can just pass the trade idea. Don't go into a trade idea just because it came from someone that you trust. You must be able to do your own trading analysis and see if you are happy with the trade or not. If you're not happy, don't be afraid. I mean, we are thick-skinned. We will not. Well, our ego is not going to be bruised because of that. We make mistakes. We are humans, so it's important that you guys can. Oh, can you not see the screen? I've got a chart. I've got a chart of the GPP, JPY. I think everyone should be able to see that. Okay, Arun, what are you using? Are you using a mobile device? If you are using a mobile device, you won't be able to see the screen, Arun. Only if you are using your laptop or your desktop. Could you please tell me what you're looking at, Mr. Patel? Okay, while waiting for Arun to come back to me, guys, I will continue with what I was talking about. I was saying that you should be able to do your own analysis before going into a trade, even if those analyses are from us or from a very good friend of yours that has been trading the markets for a very long time, the guy that you trust. You should still do your own analysis. I will put. Okay, Arun, you're saying I'll put laptop on. Okay, please do that, big guy, so that you can see what I'm showing the guys here. First of all, I want us to look at a longer time. I want us to look at a longer time frame. The time frame that I want us to start off with is a monthly time frame. The reason why I want us to start off using the longer time frame is because most people end up over trading because I mean they are looking at shorter time frames. But they do not really understand the overall direction of the market. So if you want to understand the overall direction of the market, where the market is going, where the main momentum is, it is important that you visit your longer term charts, and these charts give you a better view of what is going on in the market. I'm not saying that you should trade the monthly charts, but I'm saying that to gain a better perspective of where or how the market is performing, to get the feel of the market, it is important that you visit your monthly chart. I have a couple of stocks that I chose today that I would like us to look at. Some of these stocks have been dropping, some of them have been rising. for those stocks that have been rising, what I want us to do, I want us to look at the weeks or the tails that we're going to find on the monthly time frame. On stocks that have been declining, I want us to look at the wicks at the bottom or the tails at the bottom, and we can try so that we can try and use those wicks as our support and resistance levels. Excuse me, guys. We're gonna use those wicks for the stocks that have been declining as our support, and use the wicks on stocks that have been rising as our resistance. We're also going to be using at the monthly closes. Monthly closes are also very important. We can not only look at the weeks, it's important that we look at the closes as well. If anyone doesn't understand what I've just tried to explain here, guys, please type a message and tell me that maybe you do not understand what I'm trying to explain here, or where I'm going to with all of this, so that by the time we start looking at these things, you have a complete understanding of what I want us to look at. If anyone would like to say anything, please do that now. Okay, no one is saying anything, so it seems like you guys are happy, you understand. Okay. Okay, Rana Lucas Khadebe, you're okay. Thank you, thank you, thank you, brother. Arun, no voice. I don't know, Arun. It seems like everyone else can hear me clearly. I don't know what you need to do to try and assist you here, because I mean, it seems like you're the only one that cannot understand. Oh, sorry, not that you cannot understand. You cannot hear me. You cannot hear my voice. I'm sorry. I'm sorry, because I mean, on your mobile device, you could hear me clearly. Now that maybe you're using your laptop, I don't know what's going on there. Okay, see if we say. Well, Sivuisa is suggesting that maybe you check whether your machine is on mute or not. If it is on mute, please switch it on. Okay, you can hear me on your mobile. I don't know what's going on. I think maybe you should check your laptop out. There could be something amiss with your laptop, sir. Okay, I said I have a few shares that I've picked. I have EOH, I have Netcare, I have Barclays Group Africa, I have Standard Bank, I have Resilient Property Fund, I have Green Road, and I have Aspen. I have Aspen. We gotta start with EOH. I want us to try and apply what I'm talking about here right now. Okay, let me see. Okay, okay, Kyle. Sure. Kyle, this is our basic training here on this webinar training session. I think you should be able to benefit from this. Have you done any technical analysis before, or is it your first time, Kyle? Uh, did you come to our offices? This is your first time. Hmm. Okay. Uh, well, Kyle, this is not the real basic. I mean, the people that I've been doing webinars with over the past couple of weeks, they have some understanding of technical analysis and trading the stock market. So for you, if it is your first time, you may not be able to understand some of the things, but I'm going to try and be very basic in my explanation so that I accommodate you. And if you have any question or you want to stop me while I'm still explaining, you're welcome to do that. You can ask anytime you want to ask. But I mean, what I want us to look at, I want us to look at spotting support and resistance levels, and knowing whether it's good to go into a share or a currency pair or not, irrespective of where that trade idea comes from. You should be able to do your own uh, trade analysis for you to be able to be successful going forward. Because I mean, the main reason why I'm saying that that is that many traders have different personalities. I could be trading maybe using monthly charts. You could be trading maybe using 15 minutes charts. And I cannot say that 15 minutes charts are rubbish and they're not supposed to be used, because I mean there are so many traders out there that I know that trade does 15 minutes charts and they're making money, and there are traders that are using monthly charts or weekly charts, yeah, that are making money. But I want to stress that it is very important for you to use longer time frames to be able to spot the direction in the market. Okay, I see Etienne Naramse has a question. Can you add IMP to your list? Okay, Etienne, we will do that. Arun Patel, why they not teaching us technical analysis like basic chart, like support resistance in Cape Town branch? The reason why we have webinars, Arun, is for such guys who are so far away, like Cape Town. But I mean, if the numbers grow in the near future, I mean, we could have like live classes in Cape Town where we are physically there. At the moment, we are going to be doing webinars. If you guys can join webinars, I mean, there's a lot of information that you're going to get. Kyle, okay, great, thank you. I try to keep up and ask if I don't understand. Okay, that's fine. Ross Smith, my candlesticks are not so thick. How did you get this view? Okay, this is a very long time frame. I use it just to understand how the previous year or how the previous year did. It's a 12-month time frame. It's a yearly time frame. So we'll look at it some other time. You do not really need to worry yourselves about it. Let me go back to the monthly. But I mean, if you want to know how it's done, I can show you how it's done. It's not an issue. I can show you. You're gonna go there 1M. We'll use 20 years. Okay, I want us to take this one away. Okay, are you happy with what you're seeing now? This is the monthly time frame now. We're not looking at the yearly chart anymore. Okay. The first thing that I want us to look at a COH is something that has happened already. If you see where Marquesa is, I will leave there a horizontal line acting as our resistance. this is where the market closed in July 2015, and in September 2015. Oh, Johannes, what are you using? Oh, Johannes, you're using Android. You're using your mobile device. You won't be able to see anything, my brother. If you have your laptop close by or your desktop, please switch on your desktop. Your desktop or your laptop, and use it to connect. If you want to see the videos, otherwise you won't be able to see the videos. I'm sorry, Johannes. And this is where the market closed. This is what the market did in September 2016. The market went up in September, tested that close of 2015, and the month could not finish above this area here. It finished lower. So when you see the chart doing this, or the market doing this, you should know already that that area is an area of resistance. Where you're saying that you are using your iPad but you can't see the graph. I think that's because you are using a mobile device. Like I said, it has to be your laptop or your desktop. It has to be a computer for you to be able to see this video. Okay, so we are looking at that area of resistance. The market went up there in September 2015. It failed to close above that. It failed to close above that area. That was the confirmation that the market here had topped up. That the market had reached its top. And in October 2016 again, it tried. It failed to close above that area, but the difference with October 2016 is that the monthly close was negative. It opened up. Open was 167.08, and the close was 159.90. Do you guys understand what I'm trying to point out there? The close was 159.90. Okay, Ross, you're not getting it. Okay. I have two levels that I'm comparing here. In July 2015, the monthly close that we had on this chart was 172.34. That's where the market closed, the monthly close that we had. And the market started going down. It went up to test this area, because I mean this area is resistance. It is the ceiling. I always say that resistance is ceiling. It went up to that area, which is our ceiling. It hit it, but it failed to close the month above that area. It came down. The month that came after that was October, still in 2016. October tried to penetrate through that area. It failed. It came down again. But if you look at that chart is, sorry, that candlestick is red, which means that the market closed lower than the previous month's close. So that is why we're saying that we had a negative monthly close. I don't know. No, we haven't applied any technical indicators yet, Ross. We're just looking at the charts. We haven't applied any technical indicators. We will get to those. Bollinger Bands, I know a lot of people love using them. We will use them at some point, but at the moment, I just want us to look at a naked chart and understand how these charts work. It went there, it hit that ceiling, it came down, it closed negative. This was a sign that this market was about to turn and go down. The following month, which was November, it produced a negative monthly close. December was negative. It went up to test our resistance around 172.50, and it came down. And in January 2017, that's when we saw the market really tanking, the market really coming off. January was down, Feb was down, March was down. So as soon as you start seeing this, what you should try and do is to look for the short opportunities, or shorting opportunities, where you are just going in to sell the market because you can see that this market is failing. It is not holding up. So immediately after this long bar here, you look for short opportunities. Short opportunities, you cannot get them by looking at your monthly chart. You have to switch the time frame and go on to your shorter time frame, which is daily. Use daily, and daily will give you shorting opportunities that you are looking for. But the monthly is just there to give you the overall view of where the market is likely to go next. I don't know if anyone has a question with what I've just said now, because I mean, now I want us to maybe move to the daily chart so that I can show you what we are talking about here. Okay, let's go on to the daily chart. If you guys get confused, please don't don't hesitate to stop me. I'll stop and answer all the questions that you may have. Mhm. Okay, I'm going to use the weekly because I mean the daily time frame is too tiny. It's failing me. It's not allowing me. So so every time the market got there, it got sold off. You see those long tails that we see above our candle bodies here. These that we are seeing here, they mean that there is a massive rejection around this area. The market gets here, and sellers step in and push the market down. It went down, it went up a bit, it went back to test that support, that resistance, and we had a huge red candle there after resistance was tested. The market started going down again. We had another rejection here. The market was being pushed down. Ross Smith, what are you trying to use before? Okay, Ross Smith has a question. What were you trying to use before you selected daily? I was using monthly. I was using the monthly time frame. Ross. Ross, where are you based? Are you based in Cape Town, Pretoria? Where are you based? Because maybe you can come through to our offices and have a live session with us here in the office, not a webinar. Okay, Lucas, what I'm okay, Ross, thank you so much. Okay, Lucas, what I was referring to there is that you should first look at your longer time frame. Once your longer time frame has given you an overall direction of where the market is likely to go next, then you can switch on to your shorter time frame. To your shorter time frame, you mustn't just use a shorter time frame before understanding where the market is going. I will show you something here. You see that this chart has been going down all the time. But I mean, if I do this, this is a 1 hourly chart. This is a 1 hourly chart. I want you to tell me maybe where do you think this market is going. I'm now using a 1 hourly chart. I mean, could you please tell me where this market is going? I'm sorry, Lucas. I mean, the question is yours. I mean, if anyone else wants to ask, sorry, would like to answer the question, they are more than welcome. But I just need you to tell me where the. Okay, Arun is saying that the market is going up. Why are you saying that the market is going up, Arun? Could you please tell me why? Arun, I understand what you're saying. You're saying that the market is going up because you said because there is resistance above. I think that's what you're trying to say there. Uh, I mean, 60 minutes or 1 hourly chart, it's very difficult to understand where the market is going. It's very difficult to get the direction of where the market is going because I mean, let's now look at a different time frame. We are now looking at a daily chart. The daily chart is giving us a completely different picture from the one that we saw on an hourly chart. I can see that there is a little bit of an uptick around here, but does this mean that this market is going up? No, it doesn't mean that. You need to understand, I mean, how a bigger picture looks before you can make that decision whether the market is going up or down. Maybe if you look at your weekly, you can use this candle maybe because I mean its big candle is engulfing, it's going up, but it hasn't even closed above our 10-day moving average for us to say that this market is going up. It hasn't. It is still trading below that area there. So there is a good chance that this stock could tick up and go higher, but at the moment it's very difficult to say whether that direction of the market is going to continue or not. So the main thing that you need to look at, you need to look at your monthly chart to understand where the market is going. Look at your monthly. The overall trend is still down. If you decide to go in now, you'd be going in thinking that maybe you are trying to pick the bottom. You are trying to pick the bottom of the market, which is very very difficult to achieve. But I mean, the main thing that I wanted you guys to take away from this lesson is that you can use the wicks to understand where the market is likely to turn. Look at this bar that we had here in October. The low there was the low there was 92.01. That's where that's the lowest point that the market reached in September. And in October, the lowest point we reached was 92.15. 92.15. The market is turning because every time it gets to this lowest point, which is 92.01, the buyers start going into the market, buying the market and pushing it up. So if you really want to see what I'm talking about here, let's go to our daily chart. Let's go to our daily chart. You see, this is the lowest point where we reached 92.01, and the market in October, the lowest point it reached was 92.15, and the buyers started coming in and pushing the market up. So now I think that the market is really going up, but the only confirmation that we're going to need to know whether the market is really going up or not is the break above this level here. There is this tail on the daily. That tail on the daily is on 109.04. The market right now is trading around 100. So if the market gets to 109.04 and break above this area here, move higher, then we're gonna know definitely that the bottom is in. The market is now starting to go up. Oh, okay, Kyle. It's fine, my brother. It's okay. Please make time and come through to the office so that maybe we can have a live session here with you in class rather than a webinar. So, guys, I don't know. Are you following me? Do you understand what I'm trying to explain here to you? I know that it's not going to be easy to understand some of this, but I want you to be honest with me and tell me where you are having problems so that we can address those right now before we move on. Because I mean, I think it's important for you to understand this basic part of technical analysis, understanding a longer time frame. That's what I want you to understand before moving on to other things, so that you become better at analyzing your charts. Well, Ross is busy typing a message. Let's see what Ross has to say or what he wants to ask. Elder Tutoit also has a question or suggestion that he would like to make. Okay, Ross, I'll come to that now. Okay. Okay, Ross, I do not understand exactly what you're referring to about when you say the break. Are you referring to the market reversing and going up, or are you referring to the market hitting resistance and coming down? That's one part that I'm not getting. Okay, Elder, thank you very much. If you understand, I hope you use this. Sorry, going forward, and I hope it's going to be very helpful to you. Okay, Ross, we were looking at we're looking at the September low. We said the September low was 92.01, and the October low is 92.15. So we know the lowest points in this market so far. So that part we know. So what we need to know now is whether the market is going to reverse and start going up or not. And if the market does not break through below the low that was formed in October, it means that the market is respecting that low. The market is starting to reverse and go up. So we are going to use the daily to try and verify that. The daily shows us that the market went here in October, in September. It went here again in October, and it started going up. So the point that we're waiting to see whether the market breaks or not is this point here. The highest point is 109.04. We're waiting to see whether the market can take out 109.04. If it does, then we're going to know for sure that the market is now going up. So we can now start looking for the buying opportunities. Please do not look at the moving average that I've got there. This line here is a moving average. Do not look at it. I just want us to understand the charts without any moving averages to understand whether the market is going up or not. Someone suggested that we look at Implats. Okay, let's quickly look at Implats because I mean that's the stock that I think maybe some of you are in or hold. Okay, Implats is in a downtrend. It went up in December 2015 and started falling in 2016 October. Since then, it's been going down. So what we're going to do here, we're going to do this. The lowest point that we reached in September on this stock was 30.66. That is the lowest point that we reached in September, 30.66. So I want to try and move this down to 30.66. I don't know if I'll be able to use it. It was 30.66. So the market broke below this point briefly and it started going up again. But we are of the view that this market is falling. What we need to do now, we need to draw our resistance here. Our resistance on this stock is around 34.16. Is around 34.16. When it hits 34.16, that's where maybe you should start maybe looking to aggressively short the market. For now, it's very difficult to tell whether it's going to go straight down, unless if some fundamental news come out. But I mean, the most important point that we need to look at this point in time is around 34.16. Then from 34.16, we're going to see this market maybe coming lower. So we have the view that the Implats is definitely going to go down. I don't know. To the gentleman that wanted me to have a look at this one, are you happy? Do you want us to look at a few other things before going ahead? Is there anything else that you want us to look at? It's going to be 1:30 now. Yes, Etienne, that's true. As long as we haven't hit the stop loss yet, there's no reason for you to panic. We still think that the stock is going to go lower. So you must just sit tight. The stock is going to go down. Uh, Phidias, you're talking about MND. You're talking about MND. We'll have a look at it now. But on Implus, there is a good chance that we could go up to test 34.16 before moving lower. So you guys just have to relax and sit tight. Let's quickly have a look at MND. MND is Mondi. To those that don't know the ticker code. Okay. Okay. Let me remove all the lines that we have on this chart. Uh, just a couple of seconds. Okay, okay, guys. I want us to look at this stock Mondi. We've had a huge decline on Mondi month to date. The highest point we reached was 386.81, and the low so far is 336. This stock is supported around 336. Around 336, that's when people can really start going in and buying the share. But it is very difficult to tell whether the market is going to turn around at 336 and not breach that level, because I mean, if you're looking at the size of that candle, the monthly candle, It is very big. It actually scares me, but we think that the market is going to bounce off because I mean we're looking at the world indices, looking at the S&P 500, looking at the DAX, looking at the FTSE from the UK. They are all looking positive. So, oh, Ross, I don't know. Can you hear me now? Okay. I mean, they're all looking positive. So we're expecting the stock to bounce off that area and start going up again. I'll show you why we think that the stock is going to go up. We're going to apply our simple moving average. Uh, the period is going to be 10. Our moving average currently is sitting around 334.58. We're still trading above the moving average. To those that have attended our webinars before, we've said that every time when the price is above the moving average, the market tends to go up. So what we think the market is doing here, we're coming down to test our support here, and we're coming down to test our moving average around 334, 335 area. And if the market doesn't close below that moving average around 334, 335 area, it means that that area support is strong. The market will start bouncing off that area and going back up again to about 360, 365 levels. I understand what you're saying, Erfan, but I mean, we take all the instructions we take all the instructions from the monthly chart. If the monthly chart still says that you must hold on, you must be long, you stay long until the monthly chart changes. You don't do anything. I understand that you're saying that the weekly is showing that it's trading below the moving averages, the moving average, but I mean that happens all the time, so you don't need to worry about that. I can show you examples where the weekly was saying that we are below the moving average, and the monthly was saying that the stock is still going to go up and we should remain long. So let's quickly go to our daily time frame now. Oh, this chart looks wonky now. Okay. Okay, this is the support that I was referring to here. The market came down to this area in July, 19th of July 2017. It went up, it came back again here, it went up, it came down again here around August this year, and it went up. So we are hopeful that this support is going to hold. It's going to contain the price. If the price bounces off this area here, there's a good chance that we're going to go back up around 360, 365 level or higher, which is 385. So that is the reason why we want to remain short. But I mean, to be quite honest with you, we haven't seen the price action confirmation or the confirmation that the price is bouncing off that area. We want to first see that confirmation coming in, so that we know that if we go into this trade, we are definitely going to do well. Arun, I see no one teaches about SMA, and it is so important. Can you speak to guys in Cape Town? Okay, it's fine, Arun. I'll note these things down and we'll talk about them. But I mean, if you keep joining our webinars, you're going to understand all of these things. But I mean, you must always make sure that after the session, you go and practice, you look at what we were talking about so that you can get a better understanding. Erfan, you're saying that the RSI is also low. I think maybe you're talking about the RSI trading around its 30s. Okay, let's check. Let's check where it's trading. Well, the RSI is around 39, but what I found out in my research when I was checking the effectiveness of RSI is that every time when you see that line or the moving average on the RSI itself breaking, that's when you should sell the market. And when you see this moving average crossing below the the RSI, and the RSI going above its moving average, it means that it's time to buy. So I think it's safer maybe to wait for the RSI to cross above this line. If you see the RSI crossing above this line from the bottom, more especially at important support levels, that gives you a better trading opportunity, because you can go in and get a high probability trade if you do that. I have a couple of examples that I can show you. Here, the RSI broke above its moving average here, and the price started going up. Here we saw that happen again, the RSI going above its moving average, and the price started going up again. Here around this area, the RSI moved above its moving average, and you saw it going up here again. So it's very important that you use your levels. I know that the RSI 70 is is an overbought level, and 30 is an overbought. Well, 30 is an oversold level. So it's important that you wait maybe for the break above its moving average, so that you can confirm whether it's a true signal or not, because sometimes you get fake signals, and those fake signals end up costing you a lot of money. I don't know if this explained what you wanted to hear, Erfan. Phidias, I don't know. Is there anything that you'd like to ask? Yeah, the one that suggested that we look at this share. Okay, let's quickly have a look at stocks that I think that we'll look at two that I think are breaking out, and look at two that I think that they are going towards their overhead resistance levels. Let's look at Barclays Africa, BGA. Barclays Group Africa. Barclays Group Africa. Barclays Group Africa has been going up over the past couple of weeks. It has been going up over the past couple of weeks, but I think that we are very close to our resistance. Our resistance level is around 153, 154 area. When it gets there, you must keep an eye on it. Maybe you can even have the same line that I've just drawn here. Please don't look at any other lines. Just look at this line that I drew here around 150, 386, 155 area. That's where I think this stock is likely to reverse. If it doesn't reverse around that area, it's going to break through and go up to 172. But I mean, before we look out for 72, we first have to clear 153, 86, 154, 155 area. Once that area is cleared, then we can move up to 172.50. I wanted us to just have a quick look at that one, because I think that it's close to its overhead resistance. Arun Patel, I can see that you have a question. You're saying, can you explain again SMA, RSI? How do I add it onto my chart, please? uh, please, with any other chart. Okay, it's fine. We're gonna have a look at that one. Let's quickly look at another stock that I think is likely to hit its resistance soon. Okay. This is Standard Bank. Standard Bank. The ticker code is SBK. Resistance on the stock is around 175, 176 area. It's important that you draw a horizontal line at this high here, the high that we had in April 2015. It's important that you check what the price action is around 176 area. If the stock gets there around 175.90, 176 area, and it starts reversing, giving you a confirmation that the price is going down, you look at your RSI, you look at your stochastic, and they are confirming that they are crossing over, they are going down. Your RSI is trading maybe around 70, 75 areas. It starts coming down. It's important that you maybe look for a shorting opportunity around that area. But you must be careful. You mustn't just jump in and start shorting. Make sure that your RSI is around 70 and is starting to turn, and your moving average also is crossing above your RSI, because I mean, you don't need to rush in. Get the confirmation first before you go into a trade. That way you will be able to make money. Rushing in expecting the price to reverse at a particular level is not a good idea, because it may not turn. It could just go through that area and move higher, and that can cost you a lot of money. So you don't want to do that. You want to wait for a cross on your stochastic. You want to see the price crossing and starting to turn down, and you want to see maybe your RSI trading around 70 and also starting to slow down. Having its moving average above the price of the RSI, then that way you'd know that the stock is starting to go down. But you must marry that with your area of resistance. So what that means basically is that there has to be confluence between the chart and what your indicators are showing you. If your indicators are not in agreement with your chart levels, you don't go in. You wait for the chart levels to show to show that there is an agreement between the indicator and the price. Do you guys understand? There, I was trying to explain how the simple moving average, how the RSI and the stochastic work. How the RSI and the stochastic work. That's what I was trying to explain there. Etienne, I can see that you have a question that you are typing there. Please send it through. Oh, Etienne, I'm sorry. I think I adjusted it by accident. It got adjusted by accident, my brother. I'm very sorry if you did not hear some of the stuff that I had to say. So, but what I was saying is, I'm looking at Standard Bank. Standard Bank is very close to its resistance. It's trading around 170 levels. I expect it to get to 175, 176. When it gets around 175, 176, the structure of the chart right now suggests that it's possible that we could see a reversal around 176, 175, but you have to use your RSI and your stochastic to confirm that reversal around that area. If the stochastic crosses starts going down around that area, you can go in and look for shorting opportunities. RSI around 70 levels. If it starts slowing down and going below its moving average, that would definitely be a sure sign that the market is starting to go down. Another stock that I want us to look at, a Resilient Property Fund. It's RES. RES. Okay. Okay, this is the stock I'm talking about. RES is busy loading. RES had at its resistance around 138.15, 140 area. This stock managed to close above this area last week. If you see this this big blue bar here, it went through this area without any issues. So if this stock maybe comes down to 140, I think there is going to be a buying opportunity there. I expect that we can see maybe the stock bouncing off 140 and moving higher. So we'll keep an eye on it. Another stock that I think is breaking out. I would like you guys to go into these shares and have a look at them and tell me what you think in your own spare time. You can even send me an email. My email is sihle at quicktrade.co.za, SIHLE at quicktrade.co.za. Another stock I'm looking at Greenrod. Greenrod broke through 1460 and it closed above that area last week. So I think that it is likely to go higher. But I mean, we may have another resistance around 16. If 16 contains the price, that could mean that the stock of Greenrod is going to reverse and start going down. But at the moment, it looks like it's going up. It looks positive. And I think it's going to go higher from here. I don't know if you guys have any questions. We are wrapping up now. It's 1:30. If you guys have any questions, please shoot. I'm here waiting for you guys to ask those questions. Okay. Ross is fine. Thank you so much. Please do go through everything. Can you please explain my question on? Can you please explain my question? Okay. Arun, I'll go through your question now. AUD quickly. Okay, let's look at it. AUD. Okay. Sifuise, please help me here. What do you think is going on here? What do you want me to say, brother? I see resistance on this stock at 1.52283. I think there's resistance around that area, overhead resistance. The overall picture of the stock, I think, is up. Let me quickly check there. Yeah, the overall picture is up there. Let's do this quickly. We're looking at the previous month's close there. This is where the market closed. Okay, let's put it there. Let's put this there. Let's put this here. I see supported. We say I see supported 1.49481, and another support is at 1.49710. So as long as the stock is trading above Okay, let's see what the let's see what this low is. As long as we are trading above 1.49495, I think that the stock's uptrend is still intact. I won't panic. So I'm happy to hold along as long as we are above uh, 1.49495. I don't know. Do you have anything to say there, Sivuyise? Yeah, I hear what you're saying, but I mean, I do not, I don't see any, I mean, any breakdown in the stock at the moment. I see that the candle that we had last week was negative, but at the moment, I do not think that this thing is going to break down and go lower. Maybe we can go, but are you happy with my explanations, if we say? That's what I need to know, brother. If you are not happy with what I'm saying, you must tell me your reasons why you think that the stock is likely to go down. So, if you want to understand whether this thing is going to go lower or not, you must look at the end of the session today. Check whether this stock is going to close below yesterday's no, sorry, Friday's close or not. If it doesn't, then the stock will start ticking up, maybe coming back down to test 0.49710. But I mean, I don't see it breaking down yet. Okay, Arun, you wanted me to explain RSI and the simple moving average, right? Okay, Sivu, I'm happy if you are, my brother. Uh, Arun, you wanted to know SMA and RSI, right? Arun, your question, please. Okay, Arun, I see that you haven't sent in your question. Yeah, I mean, sure. Oh, okay. Please, please. Okay. 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 Arun, this is how you add these. You right click on your chart. Okay, Lucas, I'll explain. I'll explain what that moving average is and what it means. Okay, you right click on your chart. You go to indicators. You say add indicator, and you type in RSI if you want to put in RSI. RSI, you look for the relative strength index, not the stochastic RSI. Relative strength index, you highlight it and you go okay, okay, and it's there at the bottom of your chart. Are you happy with that one, Arun? 70. represents overbought levels, and 30 oversold levels. So if it's trading around 70 and it's at resistance, or you see resistance on the chart, you can go ahead and sell that chart or that currency pair. If it is at support and it is around 30, you think that area is strong support area and your RSI is around 30, you can go in and buy that currency pair or that stock if it is going up. The other question was the simple moving average. Okay, simple moving average, same story. You right click, you go to indicators and indicator, put SMA or just MOV for your moving average. We're using a simple moving average. Highlight it, okay it, change the moving, change the period to 10. I use 10, and then you go okay. Check your okay. This is where we start. We go to the monthly time frame. If the pair or the share is trading above its 10 monthly moving average, it means that the share is on an upward momentum. It means that it's going up. So you have to look for long opportunities only. You can look for short opportunities or selling opportunities, but I do not recommend that you do that, more especially when you're starting out. Only look for buying opportunities. That way you are going to do well. Now let's quickly move over to the daily time frame. I mean, if your stock is trading above your 10-day moving average and the monthly is above its 10 monthly moving average, it means that it's in a strong upward momentum. You can go ahead and buy the stock. The problem with this stock that the currency pair I'm looking at is the euro Australian dollar. Is trading below its moving average, which could mean that we are going to see this market trading sideways for a couple of days before seeing a breakout or before seeing the stock going much higher. I don't know if that's explained what you wanted to hear there, Arun. Are you happy with that one? Etienne, you also wanted to know how you add the indicator. I've just shown you guys how it's added or how to add one. Are you happy with what I've just shown you now, or would you like me to go through it again? Uh, okay. Okay. Yes, was helping to get this question understood. So, Etienne, you understood. You now know how this is done, right? Okay. Okay. Thank you so much. Lucas, you wanted to. Okay. No one explained before like you explained today. Really appreciate. Okay, Arun, thank you so much. Thank you so much, my brother. I will try my level best to be patient and explain the best way I can. Thank you so much, Ross. Thank you. Lucas, you want to know the one line that we have? The moving average, really, we use it to see the momentum of the market. Is the momentum up? Is the momentum down? If you go to the monthly, the chart that I use before doing anything, if the price is above the simple moving average, it means that I should only look for buying opportunities. I must buy that share. But I mean, if the stock or the currency pair is trading below, or like maybe here is trading below the moving average, it means that you should look for selling opportunities where you can sell the market. With this currency pair that we are looking at, in April this year, 2017, the price broke above the moving average, and the price has been above the moving average for well since then. So every time the market comes down, I look for support levels where I can buy this market. Like I was saying to Vuyise, that I think that this market is going to be going up, so it makes sense to look for support levels where you can buy this market. We marked our support levels around this area here. The low there is 1.49481 and 1.49710. So around that area, you can look to buy this market because I mean it's in an upward trend. I don't know if this explains clearly. If you're not happy, please tell me. I'll go back and explain. Yeah, it's a 10, but I mean when you get it as a 1. So you have to edit it, you have to edit that number to 10 to get to that 10 that we have and apply. Okay, we can have a look at gold and see why it's going up. But I think it's going up because of technical reasons. Okay, Lucas, thank you very much. Okay, let's quickly look at gold and see how it looks. If you guys want to leave the session, you are welcome to leave the session. I'm just gonna try and assist the guy that's just asked the question now. Okay, let's start with our monthly chart. Let's look at our monthly chart. Let's look at the moving average. We're trading above our moving average. The market came down to test this open here. This open was in August 2017. This tail was testing that level, and it met our support in a form of the moving average. So we are trading above our moving average. So the overall trend in gold is up. What we had was just a pullback. Now let's go have a look at our daily chart. Our daily chart bounced off our resistance line that we drew. I drew this line a few days ago. It bounced off. It had big tail, which means that there was rejection. The buyers were stepping in, buying the market, and the market started going up. On the 9th of October, the price crossed above the 10-day moving average, and the market has never looked back since then. It's been going up. I think this is a technical buy. I expect the price maybe to go up to 1,320. If it breaks above 1,320, we could even go up to 1,350 resistance levels. I don't know if that explains why gold is doing so well today. It's going up, and all the stocks are likely to do well today. Erfan. Another thing that I quickly want to look at, I want us to look at the US dollar. The rand is weakening against the US dollar today. That could be another reason why we're seeing our gold counters doing so well today. Okay. Well, we're looking at the gold chart. Let's quickly look at KIO. This is the last stock we're going to look at, gentlemen. This is the last stock we're going to look at today. KIO. It looks like KIO is breaking out. We're going to be making. We're going to be going higher towards 300 level, 320. But I mean, it's still early days for us to say that. But I think that it is likely to move much higher from these levels. I don't know what you guys wanted to look at when mentioning Kumba, but Kumba had resistance around 217, 220. We broke above that level, and we are moving higher. So I think that we are definitely gonna tick higher going forward on this stock. Are you happy with that, Etienne? Are you long Kumba? If you are long Kumba, I think you should just stay put. You are doing very well. The stock looks like it's still gonna go higher. Okay, traders, thank you so much for your active participation today. I really appreciate it. I enjoy it when you ask questions and you give me stocks to look at. That is always good because I mean it creates an active environment for both parties, myself and yourself, so that we can actively engage each other in looking at these charts and understanding what is going on. Thank you so much. Have a great afternoon.